Tuesday, February 28th, the last day of February 2023. This is Market Analysis. I'm Stan Ehrlich, and we start out with the stock market indexes every day, usually with the S&P 500, the SPDR in particular. If you have any questions, you're looking at the screen. Email me at info@ersignals.com. We have a variety of days here, a few days, where it's having some trouble at the neckline of a large, starting in June last year, head and shoulder bottom formation, which is still okay. But toward the end of last week, we came down to the neckline, which is normal, typical, but we started to get a little bit below the neckline, and that would be right here. And I'll blow this up for you full screen so that you can see a little more detail. So coming down and touching this green line, the neckline, is just fine. Getting below it bothered me a little bit, but it managed to close basically at the line, which is also okay. The next day, which was Thursday of last week, we had actually a bullish engulfing, which is a lower low and a higher high from the previous day, and the closing price is higher than the previous close. That's usually bullish immediately. But on Friday of last week, we opened significantly lower. In fact, we opened below all previous lows. All day long, we stayed below the neckline, and we closed below the neckline. Normally, that is a very bad thing, and normally that would kill the pattern. But yesterday, Monday, the market managed to salvage itself and open significantly higher, closing at the neckline right behind the green line. And okay, nothing great. I need a close above last Thursday's high of 402.20. That would tell me the market has tested the neckline with a little goofiness, and that would be last, Friday, and it's on its way back up again. Now, when I say it's on its way back up again, and of course, all my commentary at the moment is basically bullishly oriented, we will, in the next few weeks, assuming the pattern works correctly, make new highs for the whole trend above 418.5 and start to push through a resistance area and be on our way up for what I believe to be the bull market of 2023. And I've said that many times in the last few weeks, several weeks. That's the bull story, period. That's my expectation. That's what I'm liking. If you are interested in putting on positions on a long-term basis, investor type positions, ones that you're going to hold multiple months plus, we are in the price range around the neckline to do the job. If we start closing below last Friday's low, no way will I be able to stay bullish. That would be a very bad sign from a bullish standpoint, and that is your risk. So you have an approximate, depending upon your personal preferences, tolerances, etc. Not such a bad risk, not a very large one. And the upside potential is huge. The minimum upside objective on this pattern is a test of all-time historic highs, and I said minimum. Head and shoulder patterns and lots of other technical patterns typically have minimum pattern objectives if they work correctly. And we don't look at these patterns from a historical standpoint because they usually don't work correctly. They usually do. Otherwise, we wouldn't be paying attention to them. So, you know where your risk factor is. It closed below approximately 392.99 or 393. And excuse me for a second, I have an alarm going off on corn. I'm going to go to it real quick, you guys, because this means that it's breaking down very big. Where is my corn chart? I'm finding it real quick here. Well, I thought so. It's the last one to find, of course. And yes, we are making new lows, and I'm going to switch just for a second here to corn. These are new lows in corn since August 23 of 22. And I'm going to just eliminate that. Well, let's just move it down a little bit here so the alarm won't go off and bother me during our earlier comments here until I get back to corn. But this is profound. It happened real time just now. A major long-term downside breakout, assuming we stay here or go lower, of course. It's very bearish for corn. It's already broken a major bull trend line a few days ago. It failed to break a major bear trend line, even though it tested it very accurately several times. And boom, we dropped like a rock. Now, be careful. RSI is way down to 14, and this is a custom relative strength index. It's not your standard. It doesn't even look like the standard. I calculate it differently. I use different time frames, etc., etc. So, I think it's going to start rallying soon, but because of the bearish breakout in corn, I expect further downside potential and then a bounce. Don't know how much, maybe another 5 or 10 cents more, and then a bounce back to where we are right now, and then turning back down again. The long-term bearishness is there. The short-term bounce is only expected because of this significantly oversold condition. Let's go back to stock market indexes, and we have approximately high and last right now. The market is rallying, thank goodness, and maybe it's going to resolve. And that's on the left side, the 1 minute chart for the last few days. Good. So I'm liking what I'm seeing at the moment. But again, I need to close above last Thursday's high. Yesterday would be great above yesterday's high because it's very close to last Thursday's high. And probably within the hour, if you break above yesterday's high, you're going to be pushing above last Thursday's high as well. Now, don't forget, there is a gap to close. I've been failing to mention that. It wasn't really important until now. At around 408. So I fully expect a minimum shot straight up of about 10 points. We're 98-ish right now. And that's not a lot, 10 points, to close that gap. Now, remember, we were almost in oversold territory from what I consider it oversold, not 30, but significantly lower than that. And we do seem to be turning back up now. But again, I need follow through. I can't stop here and start to go back down, and then I'll not look good. I'll be wrong. All right. That's the spider. Let's go look at the DIA real quick. We did get an official buy signal that didn't work last Thursday, an outside update, bullish engulfing, and an official oversold condition in the DIA. Now, this head and shoulder bottom is not exactly the same as the head and shoulder bottom in the S&P 500. Excuse my cough. Now, this shoulder is very wide and large and a little unusual because of that. But the body parts are there. They're approximately in the right place. There's nothing really wrong, except that it hasn't got its rear end in gear yet and started to rally. Again, last Thursday was that green bullish engulfing buy signal right here. And closing above that would add a lot to the expectation that a significantly larger rally was in progress and that we bottomed out Friday. And we did get yellow, which means oversold, even though it got below the low of the key reversal, my buy signal, which it should not have normally. We still look like the market is trying to turn up. Now, DIA is not even higher on the day right now. In fact, it is around unchanged. So it's lagging behind. But everything else is okay. The Qs, on the other hand, are leading the way up. And it was way back on January 23rd, a little over a month ago, when it broke its neckline. and its long-term bear trend line, the only major bear trend line for the full bear market of 2022, which has been broken, of course, in the spider as well. Now, the minimum upside objective for the QQQ is in the neighborhood of 347. We got already up to 313-ish, which is approximately 50% of the minimum amount I was expecting, again, already, but it got very overbought. And there it is, very overbought, above the red line. Anything above the red line is a warning that the market is going to turn down soon, highly likely to turn down soon. Anything below the green line on my RSI is exactly the opposite. It's a warning that the market is about to turn back up soon. And that was December 28th, the bottom day of a little double bottom. And of course, my whopper for the last, well, year or so was my forecast of the October lows a month or two in advance. And it happened on October 13th, the bottom of the bear market, period. And so far, the beginning of a long-term bull market to the exact date. Don't try that at home alone. Now, so far so good. Within the next few weeks, I think, I expect, I hope we're going to see new highs for the trend, unless something goes wrong. And of course, I'll say so at the time if I see it. So that's the QQQs. I like it. No problems. I'd love to have another major buy signal. I don't think we're going to get it because we didn't get as oversold as I'd like into the official oversold area. Okay. That's stock market indexes. Let's look at futures. I got a couple of brand new things here today. One of which is corn, and we just finished talking about this. We just made new lows for months, going all the way back to August. And we need to stay here or close below here in order to have a major long-term breakout. But even though we made lower lows, it wasn't by much. We're significantly oversold, and I wouldn't be surprised if there was a short-term small rally for a few days, maybe a week, immediately, and then lower lows below 634. So the bearish expectations don't change. It's how you go about doing it. And since we're at 14-ish on the RSI, that's very oversold. So we're going to get a little rally maybe, and then down, down, down. Okay, that was corn, and I want to rearrange. Okay, and the E-mini, S&P 500 E-mini. Of course, I made the same kind of comments in general about the spider. We're around the neckline, but the prices ranges are a little different because of the fact that E-mini is open a significantly longer period of time. The hours are much different, allowing it to make higher highs and lower lows when the spider can't. All right, same bullish expectations. Next chart. We're looking at corn. Next chart. Cotton. We had a bullish engulfing. I said so on Monday. We're struggling a little at the moment to make higher highs. The lows are significantly higher. We came down to my green dot, which is the entry for an ER3 strategy entry. ER1 is always long or short once that daily bar turns green or red for a sell signal. But this is a buy signal. So we now have ER1 longs and ER3 longs. That's it. Those all my strategies. So now I am definitely hoping and expecting that the market makes new highs for the trend, or I should say for the last 2 weeks, real soon. Sooner the better. Next chart. Crude. Long-term bearish. We had a very nice, not the greatest, new short sell signal, January 27th. It worked very nicely. Got oversold at support. Turned back up like corn, sort of. Turned back up again for a little bit, like maybe corn's going to do. And is in the process of still going sideways, but I think it's about to break down big time and start to trend a lot lower. perpetuating the long-term bear move, which started way over here, June 14th of 22, with a bearish ER sell signal, the red one, accompanied by one a little too early 2 days before, and another one about 3 days afterwards, which also was very good. And look what happened to those sell signals. Wow. For months, we saw a bear trend. This sell signal was okay. I wouldn't write home about it, but it worked for a few days. That gives you plenty of time to make a profit. Remember, this trading system was originally built for relatively short-term swing trading, basically signals. But many of these signals turn out, in retrospect, 2020 hindsight, to be hugely profound. October 13th, the bottom of a bear market, beginning of a bull market, stock market and indexes all over the place. And many other signals in commodities and stocks and sectors and forex and you name it. 52 years at this, I hope I've learned something in a half a century. Next chart. Natural gas. We got the bottom of the market a few days ago. I said so at the time. Now today we haven't got a higher high, but every day since then, let's see now, that would be Friday, Wednesday last week, Thursday, higher high, higher close, Friday, higher high, higher close, Monday of this week, higher high, higher close, and today, a little bit sideways. It deserves a little bit of a dip. Now, we're not overbought, so there's no expectation whatsoever of any large decline. In fact, a minor little dip somewhere, you might want to consider buying it. Well, I can actually peg it at 24, the low 2.4 something, low number, 2.4, 10, 20, 30, a little under today's low. Next chart, 10-year notes, profound market. Obviously, interest rates are extremely important to the stock market indexes overall these days and have been for quite a long time. So if this chart bottoms out, it implies rates are going to go down, and that is what the stock market's like. We're oversold, and quite a bit so. Look at how low the RSI has recently been, down in the teens. And we're having one, it didn't work, buy signal, ER buy signal, but they cluster sometimes. Sometimes you get 2, 3, 4 within a couple, 3, 4 weeks. Usually they're by themselves or maybe 2, but this one didn't work so far. We might get another one. We're still oversold in the next several days. I would not be surprised. I'm hoping that happens. That's 10-year notes. I think it's bottoming out. Look to get into a long position with a reasonable risk and reward ratio, which, by the way, a lot of people like to use 3-to-1 or a lot better than that, maybe 5-to-1 profit to loss. And what are we doing here? I have that corn alarm going off again. Wow. Okay, new lows on corn again. Let me lower this line again. Okay, great. Going back, sorry about that. Oh, wait, that was in futures. And we were talking about bonds. So let me find that again real quick. Sorry about this. Okay, here we are. Now, no change, 10-year notes and bonds. And here is your, I think, 10-year notes, I hope. Oh, darn, I lost the sequence. So I'll just have to talk about as they come. This is bonds. I think it's bottoming out. I'm looking for the beginning of a rally. I hope we get another buy signal. Next chart. Corn, we just discussed that. 10-year notes, good. So, same thing as bonds. Very oversold recently, starting to show some signs of bottoming out, loss of downside momentum. We had a buy signal that didn't work exactly the way it should have, I hoped. And that's not terrible. Remember, I don't know of any system that works every single time. In other words, 100% track record that's profitable for every signal. Yeah, oh, I do know of one. Don't trade. That's a little joke in the industry. So let's watch this very, very closely. No surprise if we have another green bullish engulfing. Next chart. Platinum. Here we go, ladies and gentlemen. All three precious metals, gold, silver, platinum, now have bullish engulfing official ER buy signals. Yesterday, platinum had one. Up we go. Next, today, gold, new low, oversold conditions for weeks. And finally, another buy signal. Remember, I told you they cluster sometimes. That one didn't work, but we stayed oversold, coming down even more. Remember, I never stay with a position that doesn't work. We always, always, always have a protective stop, commonly called a stop loss. I don't like the word loss. I like the word profit. A protective stop on the other side of the trade if it goes the wrong way. So that's the yellow dots, by the way. And those are only the initial stop. Once the trade starts to work, which could be the same day of the green or red, we start with our automated ER1 and ER3 trading system moving the stop. The yellow dot is simply the beginning. So, and I'm not showing you the ER because we offer that for lease on a monthly basis. Next chart is silver. Again, we have a blatantly obvious bullish engulfing in oversold condition, green ER buy signal, and a second one as we dove into new low ground. I like this very much. That doesn't guarantee it's going to work, but I do like this combination. I'm increasing my confidence ratings, so to speak. In the next few days, I would love to hit that little green dot and not go below the yellow. And then, of course, after hitting the green dot, start to make higher highs. Now, remember, ER1 is already long today. And I can tell you approximately at 20.97. So it has a little bit of a profit right now. And I can promise you that that trailing stop, and you don't see the trailing effect on the daily data charts, has already started to move up, lessening the risk and locking in less of a loss and, I used the word loss, and improving your track record in a general sense. Next chart, cocoa. I think I'm getting out of the ones that I wanted to talk about because they had signals or something really important. Bean oil, neutral. What I do, of course, I scan through looking for yellow, and we're overbought today, and other yellows at highs and lows, and reds and greens at tops and bottoms for buy and sell signals to see which ones are working really well and ones that are not necessarily. Got a fantastic buy signal on this one. This is high grade copper, and a great sell signal way back here. Next chart. Buy signal worked for a day or two, nothing great. That is superb. The bottom of a swift crash and a giant rally, 3 days down, 3 days back up again, big money. That one worked okay. That did not work. That one worked very, very nicely. A couple of good green ones went straight back up again. Next chart. Red smack dab on top of that rally, and that's why this system is being built, or built past tense. By the way, we're working on a version for Ninja Trader. This version is for TradeStation. I've been working on it for over a decade. Next, sell signal on top of a rally, sell signal on top of the rally. When I mean on top, I mean the high day. Sell signal on the high day. 2 days after the high day, this is heating oil. I'm looking for very soon a major long-term downside breakout below those two green lines. I expect it to happen. I hope it happens. I think it's going to. Keep your eye on heating oil for new long-term bearish breakouts. Next, coffee, no comment. Next, sugar, no comment. Soybeans dropped off very sharply, reached a little resistance. Other than that, we're almost oversold here at 26. So watch out. Don't go short here. You missed it. If you're looking to go long, now is the time to watch very closely. Next chart, wheat. Same comment. If you're looking to go long, now is the time to watch very, very closely. and get ready to go long. We had a very nice sell signal a week ago at 370-ish. And here we are, I'm sorry, 770-ish. And now we're at 702. Come on. That's great. 70 cents down, 10% down. Next chart. And we're back to the S&P 500. And it looks like it's still doing okay, but it needs a little pin to stick it in the rear end here to get it going. A good sharp rally would be great. 2, 3, 4 points or even better to get above some of these recent rally highs. That's it, ladies and gentlemen. Thank you very much. Talk to you tomorrow in March.